Well, good afternoon to all of you. Thanks for attending. I know it's already a little bit late and we had a lot of sessions, but hope you will enjoy that one as well. So I'm Jean-Luc Lamarque. I'm Global Co-Head of Primary at Crédit Agricole CIB and quite involved in ICMA for a number of years and very pleased to be here. So first of all, I'll give the floor to my panelists, distinguished panelists, to introduce themselves, and obviously we will start with Leila.
Thank you. Good afternoon, everyone. I'm Leila Sassi. I work for Holcim, the leading building material company. I'm part of the treasury team, and I'm head of sustainable finance and in charge of the capital market activity.
I'm following Philippe Berthelot. I'm Chief Investment Officer for Credit and Money Markets at Ostrum. Ostrum Asset Managers, sorry. We do invest in green bonds, amongst others.
My name is Sean Henderson. I'm the co-head for debt capital markets for HSBC in Asia Pacific.
I'm Mark Whelan. I'm the head of funding for Allied Irish Banks in Dublin and responsible for a variety of debt issuance, securitization, covered, capital instruments and senior debt, including green and social.
Thank you. So in order to keep everyone awake, we're going to start the other way around for the questions. So Mark, in the context of generally increasing rates, volatility, and the recent bank-specific dislocations, we know all what we are talking about. How have you changed your behavior in terms of decision-making, instruments, maturities, currencies, timing for new issuance?
Okay, well, look, I think the broader context, and it's been apparent for quite a number of years, markets are characterized by volatility, uncertainty, complexity, and ambiguity. For us as an Irish bank, that goes back to 2016, the Brexit vote, which was in June of that year. And subsequently, there's been a series of events, whether it was COVID, geopolitical events, uptick in inflation, monetary policy tightening, and then we see idiosyncratic market events impacting institutions. So it's really a continuation of the same themes or same issue in terms of how do you plan and how do you manage your debt issuance. So, key consideration for us is around timing. And by that what I mean is being flexible, nimble, agile, and being able to respond to certain, market opportunities when they present themselves. There was a phrase used earlier this morning by Armin Peter, which is you need to have your finger on the pulse, and that is absolutely critical. And finger on the pulse involves engaging with investors and all other market stakeholders, including your advisor banks, to get contemporary information, because information goes stale and out of date very quickly in volatile markets. And then supporting all of that, we would ensure that we have a sort of proactive debt management framework, which involves our internal and external legal advisors, so that you are ready with a live program at relatively short notice. And then also very effective, efficient governance and decision-making frameworks, so that you don't get delayed by going through governance or committee structures. And that becomes much more significant when you're into capital instruments, where some of the decision-making becomes more complex and involves external stakeholders as well as internal. So that would be that perspective. And that's probably the key consideration from our perspective. You asked in terms of impacting instruments. I mean, for us, just given where we are in our financing cycle, we've been predominantly looking at the senior unsecured market, and we haven't had any capital refinancing decisions to make of late. That will change in 24 and 25, and we'll sort of cross that bridge when we come to it. I won't prejudge, because if I had sort of prejudged what we may or may not do in the future over the last 6-7 months, I'd have probably come out with different outcomes on each occasion. So that's significantly there. In terms of currency, certainly currency diversification I think is pretty critical. And for ourselves, I mean, euro is our base balance sheet currency, but we have become more active in dollar markets and will continue to do that. And I think what you can see is there can be a slight dislocation between the two markets, whether it's in terms of pricing or how receptive the primary markets are. But again, you're back to this notion of being able to access and tap into markets when they're open to you. I think the other final consideration, and I'll try and finish up and let the others speak, is using ESG labels. And that has been what's the phrase, a really good decision that we made, and we invested significantly a number of years back in setting up frameworks, and I think that has been beneficial. At times, I think it doesn't guarantee you a good transaction in a very challenging market. I think if markets are very challenging, that is the bottom line. But certainly it can be a risk mitigant, and we take that into account in our decision making as to what to do and when.
Thank you, Mark, very much for that. You'll have the opportunity to ask questions at the end of the session, so no worries. Sean, I think that's, we try to be sequential, so we started with the issuer. Now we would like to know from a DCM perspective, following Mark's comments, in which term and how your DCM business has been impacted by that volatility, how you run deals before announcements and during the process, and including obviously any type of marketing, investors, and so on and so forth. The floor is yours.
Sure, thank you. I think the first thing, it's really important to recognize that the challenges of last year are completely different to the challenges of this year. And I think where that comes from, and I think a key driver of that, if you consider where we started in January last year, we had a US Treasury 10-year at 1.5% and an inflation rate of 7.5% and rising, right? So you had a huge period of adjustment for the first 10 months of the year when the market was catching up. Right? So the market was catching up with the economy rebounding after COVID. It was catching up with this very significant spike in inflation. And so all the way through last year, it was actually a very challenging time for the markets, because by the time we hit November, the 10-year Treasury was sitting at 4.2%, right? So, you know, pretty much the whole market was trading underwater through much of the year, right? If you bought anything in primary, it was very difficult to be trading above water a month or two later, because you know, generally fixed income was trading very difficult. And I think that's why it was so data driven, right? People were looking for, is inflation coming down, or are rates going to have to go up? And obviously throughout the year it surprised on the downside with inflation data, and of course fixed income struggled. So when we were looking for execution windows last year, it was trying to find those windows of stability where we felt that, you know, people were confident enough in the rates view that they were willing to put money to work. I think the cycle's completely different this year, right? Since January, if you look at the 10-year Treasury, it's been a very consistent range. It's in that 3.5% to 4%. So the view is we're at or near peak rates, right? Longer dated rates are much more stable now. And so putting money to work in fixed income for the asset managers is a much more viable proposition. And the performance of fixed income assets as a result has been much more positive. So the technicals of the market are very strong. And that's also helped by the drop in supply. So if you're looking at, say, LIPA fund flows, last year there was 110 billion that came out of investment grade because the market was in such a difficult spot. Year to date, it's plus 16 billion, whereas supply has actually fallen largely, right? Particularly in certain areas like Asia, for example. In 22, we had 420 billion plus of supply. In 21, we had 460 billion, 420 billion, and then in last year we were dropped to about 260 billion. So about 40% off in terms of supply. But this year, that hasn't come back yet. We're still running at last year's cycle. So the market's feeling more constructive. I think the lack of supply is a real challenge for investors. And so the technicals are very favorable. Where the risk is coming from is its idiosyncratic risk. It's bank failures. People are worried about, you know, debt ceiling. People are challenged by, for example, concerns around what's the cost of financing going to have an impact on commercial real estate. So I think all of these types of challenges are much more credit related rather than inflation and rates related. So the types of risks are very different. And what that means, I think, for issuers is the windows of opportunity are dictated by strong technicals, but trying to avoid headline risk, right? Like, for example, the debt ceiling issues. The other issues I think that we're finding is the nature of the execution is very different to what it was a few years ago. So the marketing process is not physical anymore. A lot of people are doing things in a virtual manner, which also helps shorten execution windows. I mean, we brought a debut issuer out of Australia in the mining sector, which is typically not the easiest thing to do. And they managed to do an entirely virtual execution within 3 days covering Asia, Europe, and US and get in and out of the market before any windows of a challenge. And that was around the time of, we were dealing with debt ceiling issues, we were dealing with bank defaults, and so they kind of got into a very narrow window. So in some ways, the nature of the execution cycle is much shorter. And I think it's still important to meet clients as investors, but you can do it in other forums. You can go to conferences, for example, or you can go on non-deal roadshows. But the execution windows are shortened much more than they were, say, a few years ago. The last point I would say is ESG is now a huge factor in every conversation, obviously. But what we're seeing is it's evolving a little bit from being a sort of niche targeting a certain type of investor into much more a conversation with every investor. Every investor now has some kind of ESG filter that they're putting onto their investment decisions. Yeah. And so a larger, much more significant part of every roadshow conversation is now having to make sure that you're addressing the ESG. Whether it's a labeled deal or not, you need to have it as part of your conversation. So I think those are just a few issues that we're facing in terms of how we're thinking about execution.
Thank you very much, Sean. I think obviously now we need to distribute bonds, so we need to know what the investors are doing. So Philippe, how have you been reacting to volatility, unexpected news? Also, how would you manage your duration in that kind of rate environment? And also your sensitivity to pricing, concessions, size, anything else you judge relevant?
Thank you, Jean-Luc. Yeah, I used to say, in respect to Elizabeth II, annus horribilis for fixed income assets last year. It's going to be annus mirabilis, a marvelous year for fixed income this year. And when you look at total return, we can enjoy that, and we're glad for that. What matters for us as asset managers is to have an active primary market, because it is another way to indicate that there is some liquidity, because it helps you recycle your secondary positions. As an asset manager, I do like issuances with some decent new issuance premium, but not that much because it would attract tourists. And we don't like that. We need to have stable book and performing issues. And this is why I'm going to be a bit criticized. Jean-Luc, not Jean-Luc as a syndicate at Cassie, but some syndicates. You're playing a key role because, when you do allocate in a pot deal, according to the investor style, real money, insurer, buy and holder, or hedge funds, if it's not properly done, and you're doing that the right way, thank you, Jean-Luc, it helps. Some performance are disappointing. This is why your role is key as a syndicate, and this is why the interaction with you and the issuer is paramount. You said something which is very, very important nowadays. At Ostrum, we do have some 25 billion of investment in green bonds, but not only in social and sustainability-linked bonds. I would praise ICMA, by the way, for what you've done in the last 10 years about the green bond principle, the social bond principle. And I'm just launching a help for some regulators in the audience, because under SFDR, it's paramount now to publish the percentage of investments that are deemed to be what they call sustainable. And there is no genuine definition of what sustainable means. It's different from every asset manager, from every jurisdiction, between the regulators and some association of asset managers. We need to have standardization. It's key. It's paramount for us to make sure that we do serve our clients' best interests. Okay? That said, 25% of corporate bond issuance, by the way, credit bond issuance in Europe in the last 2 years, being banks or corporates, are welcome. Some sustainability-linked bond in high yield, not enough green bonds, unfortunately, but we look forward to that. And I will introduce that to my colleague on the left, definitely, are also welcome. Now, our job is much more enthusiastic in a world where you have 4% on investment grade and 7.5% on European high yield, a bit more on the US side. Getting a remote from central bank, buying tons of assets for nothing. Okay, it's been nice, but I think it's not fair. Going back in a normal phase of the market with a bit more volatility. It was too much last year, a bit less this year. is welcome. And back to our job. That's doing our, day-to-day job of credit managers, analyzing balance sheet, cash flow statements, and income statements. This is why our ecosystem is very key to all of us, I think, around this table.
Thank you very much. Maybe one quick word on duration.
I have a question.
Yes.
That will be yours in a second.
Yeah.
About the way you manage duration, because I know it's always of interest for the benefit of everybody. It's a key point, and it's a skill.
It's been active duration management has been key last year because it's been more a rate crisis than a credit crisis. But nevertheless, it's been a big part of our alpha outperformance. Having the right rate exposure has been key. We do use either futures or interest rate swaps. I do prefer to look at a corporate spread versus the swap curve whereas some others do prefer versus treasury because our job is mainly focusing on credit, but definitely been very active, including, by the way, on the primary market issuance, is key to perform on the long run. And it's for asset managers, it's very important to do so, yeah.
Thank you very much for that, Philippe. Very appreciated.
Yeah.
I think
no, just
you wanted to have a question.
Yeah. Exactly, yeah.
Okay.
No, thank you, Philippe. Just on the sustainable investment, so does the EU taxonomy help you also to define what is a sustainable investment?
Yeah, for the time being, we've got a very orthodox definition at Ostrum, which means that sustainable are only GSSB, green, social, and sustainability-linked bonds, which is very, very small as a percentage of everything, whereas some of the asset managers do use what you've stated or use some KPI from either, let's make some publicity, MSCI as an extra financial provider. We do have our own system blending MSCI and VGO, by the way. But what I mean is we should have for every asset manager the same way we do publish. Some asset managers do publish 25% of durable or sustainable investment, whereas for us it would be just 2%. And it gives the fake impression from an investment perspective that some other asset managers are more, let's say, green-oriented or ESG-oriented than the others, whereas it's not accurate. This is why we do need to have standardization and the same definition across the ecosystem.
Yeah, to have a comparability.
Exactly.
Of course, basis.
Thank you.
Well, thank you very much for that. I think we are perfectly fine for timing so far. So Leila, you'll have plenty of time, and we are always very interested to know how, within your company, you handle the ESG decision-making in terms of what kind of transaction you're doing, what kind of market you're visiting, and also, obviously, I think everyone would like to hear about one very important topic, which is KPIs, obviously, that you're using.
No, thank you, Jean-Luc. So let me start with a few words on our sustainability strategy. So at Holcim, we are committed to sustainability is a key pillar of our overall strategy. We released in November 2021, a new strategy that we called Accelerating Green Growth. And sustainability is a key pillar of this strategy. And finance is no exception. So we have also within finance sustainability target. And so we committed to reaching by 2025 at least 40% of sustainable financing. And within the same time frame, we want to invest at least 500 million in green capex. And after 2025, it will be at least 500 million per annum of green capex. As a cement maker, of course, we have a high CO2 footprint, even though we are trying to diversify a bit our business, but the CO2 footprint is still there. And we have to address this issue. So we have also to play our role, in finance, and that's what we did with the setup of sustainability-linked financing framework. And for us, it was very important and crucial to use KPI, which are the most material for the company. And of course, having explained the industry where I'm coming from, the CO2 footprint, the CO2 scope 1 coming from our cement activity was for us, the most material KPI. And when we revised our sustainability-linked financing framework recently, So we also took the opportunity to review the KPIs. CO2 was a no-brainer, but we looked at other KPIs and other ESG issues, and we decided to add a new KPI, so linked to water. It's a reduction of fresh water withdrawal in our operations. We also operate in areas where we have water scarcity. So it was also important also to address this issue of water. So I know the focus is climate, CO2, but water is also a very important issue. And so we have here two KPIs which are core relevant to our business and material, and the materiality has been assessed internally but also externally with ISS when they have issued the second party opinion linked to our framework. And so the decision to issue sustainability-linked bonds for us was also quite obvious when we released a new climate strategy with targets validated by the Science Based Target Initiative and also aligned with the EU taxonomy, not with the EU taxonomy, but with the Paris Agreement. And that was for us important because we had ambitious targets and credible target that we can use, within the framework. And linking our funding activity to our sustainability objectives was also for us a mean to show to our investors that we are committed by all means to reach our targets. And also, when maybe something also to highlight, the opportunity for sustainable financing arises while your business also transforms, So, meaning that more you also invest in greener product and more you will have opportunities to do sustainable financing. And I see it really as a virtuous circle. So each time when we issue a new bond or we do a new financing, so we ask ourselves how we can make it and link it to sustainability. In terms of market, we are quite, agnostic. We are active in the euro market, the GBP market, dollar market. We used to be very active, less in 2 days, and we are also an issuer in the Swiss franc market, but of course our core market remains the euro market. It's there where we have issued around 70% of our debt capital market. And when we issued our first sustainability linked bond, we did it in the euro market. Why? So first of all, we were the 5th company worldwide to issue sustainability linked bonds, so it was very new market. We were pioneering first in our industry, and we thought that the euro market was ready, to welcome positively sustainability linked bond from an issuer as Holcim.
That's very, very interesting. I've got one quick question, because you're doing obviously a lot of marketing, and so you're speaking to a lot of investors. Have you seen over the last 18 months or 2 years some change in behavior of investors, in the question they ask, in the way they approach the ESG problematic?
Yes, no, indeed, and investors are becoming very sophisticated when we talk about.
Which is scary.
Decarbonization, roadmap, and so on. So no, I have very regular calls with investors, and I also invite my colleagues from sustainability team also to explain what we are doing in a different front, but especially in the front of climate. And yes, so we are asked how we are going to reach the target, what are the levers we have, what are the investments we're going to make. They ask questions about the ESG profile of the company. So we are, of course, rated by the main ESG rating agencies, but they also do their own ESG assessment. So we engage with investors, and yes, so it's an ongoing dialogue that we have with investors, and there is no single roadshow where you don't have, of course, questions on your decarbonization roadmap. So, and all the calls I have today are 80% of the questions are related to ESG and credit rating. Less because we are rated BBB+. I mean, it's a strong rating, so they are more concerned about our transition and how we are going to make it happen.
Thank you very much.
I think the big change and the big reshaping of our investment process has consisted of adding the extra financial items, where we used to focus on internal credit scoring or rating agency ratings for sure. Now every time we do an investment, we're going to look at the extra financial score. Every time. And it is a portfolio management duty. We're going to look at carbon intensity, a second indicator for the French SRI label funds. Article 8 SFDR is a bit less demanding. Article 9 is very demanding. Then we have a lot of asset managers can choose their camp, but definitely the focus on SRI, ESG items, KPI, has become an obsession in every portfolio manager eyes.
Thank you very much. As we've been very disciplined in terms of timing, we do now have time for questions. I was supposed to have an iPad, but because Rory said I could steal it, they didn't give it to me finally.
Right.
Are there any questions, or if you can probably raise question into the, if someone can circulate a mic, I don't know how we organize there, but some people might have questions. So we would be delighted to answer. I'll blame Rory anyway. Anyone has any question in the room? Yeah, there is a question there.
Hello, Thomas Couder, AXA Investment Manager. Wanted to add a question on how do you see the dynamic of the issuance in the sustainability-linked bonds market after a strong start of this new asset class a few years ago? I think it was really sometime attacked, and if you tell me of personally, I think wrongly attacked from NGOs or public on claims of greenwashing, and it starts to be a bit less often that we see sustainability-linked bonds. So I take the opportunity to have the DCM and also issuer of sustainability bond to how do you see the future of this asset class? Thank you.
If I may, I will start and then I will leave the floor to my colleague very quickly. I think Xavier Muscat, my CEO, said earlier that it's a work in progress. So we've been issuing, or issuers have been issuing green bonds for the last 10 or 15 years. It's completely well now defined. There were the green bond principles, which are sitting with the ICMA. You've got the social bonds principle, which are also sitting with ICMA. So to a certain extent, it's pretty straightforward. And we were preparing this panel just earlier on, we made a comparison. If you do a green bond, it's quite simple because you do issue a green bond under a certain framework, which is clearly defined, your framework. And then the only thing you have to take care about is how you use the use of proceed. They need to be dedicated to green bond projects and used in that direction. So it's pretty straightforward. I made the comparison that it's almost like an ABS. When you do an ABS, you take the mortgage out of your balance sheet, you package them, you put that in an SPV, and you know exactly what's going to happen after. And for the ESLB, obviously, it's a work in progress. It's a much more recent way of issuing in the ESG spectrum, and by definition, it will need some improvement. But I leave the floor to my colleague. Mark, you want to start with that? Or?
Yeah, certainly. Maybe you heard our discussion prior to coming out from the podium, because that was one of the very items that we were talking amongst ourselves. So AIB is a bank issuer. We're a traditional green social use of proceeds construct, so you're very familiar with that. But in terms of where our underlying businesses are going to evolve and grow, in terms of the lending that they're doing to our customer base, the significant area of growth is going to be sustainability linked loans. And on that basis, it would be optimal, I think it would be ideal, if there was an equivalent use of proceeds framework concept that could be developed, whereby, assuming it's credible, sustainability linked lending, with meaningful targets, meaningful measurement, that I think would be hugely beneficial. I think there would be a significant amount of work required if it was to be frameworks that could have a cross-section of underlying asset classes. because obviously depending on the industry and the sector, there may be different measures that would be applicable at the borrower loan level, and then how do you capture that, and then how do you reflect that in terms of the equivalent of an impact report when it comes to the bond issuance. But certainly that is something that we're, from a treasury perspective, actually talking quite actively to our corporate banking colleagues to understand what is their strategy, what is their lending frameworks, what are the corporate customer types, and they may use the phrase sort of general corporate purposes for the loan description, but within that you may find that 80% has been identified with specific projects, and the customer has simply said, I don't want to have 4 loans, with, I said, 80% on a sustainability project and the rest of it for some other general purposes. I prefer a single facility. So how can you marry that and reconcile that with, obviously, from an investor perspective, they want to make sure that there's integrity in terms of the frameworks, the underlying assets, their impactfulness, how additive are they in terms of the transition to net zero. So I think there's a bit of work. Hopefully there's some smarter people than me thinking about the same question in other institutions, and that something does emerge sooner rather than later. And certainly it will be of real interest. And I mean, AIB is totally committed to sustainable issuance, and the addition of this would be a big plus.
You will all speak.
Okay.
Come on, Philippe. Unless Sean wants to do in order, but or you want Philippe to start? Or?
I'll let Philippe start.
Or lady first, I would say. Lady first.
It's a very important question, so I know you all have a lot to say. So.
No, just to add to what Jean-Luc said earlier about the principles, validated by ICMA. And we do have also principles for sustainability-linked bonds. Yeah, you have the principles, which have been also released by the ICMA. And we are also fully aligned. I mean, our framework is fully aligned with these principles. And there are also working group within ICMA, in order to address all the questions, of course, also around greenwashing. But I think there is also an important element to mention about sustainability-linked bonds. So first of all, the KPI has to be material. And the target associated has to be ambitious. And how do you measure the ambition? You measure it against your past performance, but also against your peers and international standards. It's easy when we talk about CO2 because you have the standard. When we have other KPIs, I agree, it's more difficult. So on that, on the greenwashing, I think we have also to be careful, because if you do everything properly, normally you shouldn't be attacked, around that. And also, maybe we also discussed earlier about SLBs and, of course, the controversy that we can have around. I think also it's a good transition tool for companies coming from hard to abate sector, for example, and also to show your commitment to sustainability. I think it was a great tool for Holcim, and as I said earlier, while your business evolves, you invest more in green products. It means you will have more need also for green funding. And someday you will see also green bond issued by a company like us. I'm sure it will happen. And it's also easy when you come from the renewable power, for example, industry, of course, to issue green bonds. So, yeah, I think we have to put also a bit things in perspective and, and not to be, too maybe critical about SLBs.
I would add perhaps to Mr. Kuda a question. SLB are welcome because definitely in European high yield, you have not that many social or green bonds. And within sustainable portion, it's welcome. The second topic is relevant but wrongly attacked. Perhaps it was missing or lacking a right or robust framework. Now it's done by the ICMA, but perhaps it's going to be strengthened in the future. Again, we need more normalization, more standardization. And this is why in-house at Ostrum, we've got, in addition to our 21 credit analysts doing their, our own internal, rating agency, we've got 2 sustainable bond analysts that define whether or not it's light green, deep green, or brown, or is it really social or sustainability linked with the proper 2 KPI that are easy to gauge, from an independent auditor that are likely to be accepted versus the peers. But you know that our world has grown in complexity and it demands skills. This is why our job is more and more interesting, because we are reshaping the finance world.
Sean, anything to add?
Yeah, I'd just say I think both assets actually have their own value. If you think about a use of proceeds approach, it's great, it's nice, it's clean, it's simple, you know where it's going, but there's always a risk that actually the corporate itself is still doing a whole bunch of other stuff, right, which is not compliant. And likewise, when you look at an SLB, you're dealing with it at a corporate level, so yes, you got to get the KPI rights, but one of the other issues is you don't necessarily know exactly where the money's going. And that's where some of the NGOs jump on it and they say, well, this company's doing that project and the use of proceeds is going there. So actually, in some instances, I think as an investor, you need to look at it from both angles, right? Even if it's only labeled one, you need to consider the other. And we did a bond for a power company in Asia, which actually had both elements to it. So it had both the use of proceeds and an SLB angle to it, because people wanted to know that they had a proper transition plan in place, as well as wanting to know that my funds were going to help that, rather than to old legacy projects. So I think your question's a good one. My answer would be, I think both elements are important, right? I think your question also alludes to the fact that a lot of people are starting to avoid SLBs because of the criticism that's coming. And I think that's fair. We're seeing it from a number of issuers, thinking my upside is near zero. There's no greenium, right? I have a risk of facing a step up, and I have risk of being criticized. And I think that's a real shame, because I think SLBs are incredibly important for helping those hard-to-abate sectors and getting them to commit to transition pathways. So the way to kind of address it is, I think we need to be more thoughtful about the type of language you use on a deal when it's not well structured. I think a deal that could have been structured better is a different thing to a deal that is deliberately going out to mislead, for example, in greenwashing. So I think we need to be a little more thoughtful about how we approach this topic, because I think the SLBs are a critical piece of the puzzle to helping difficult sectors transition, and not just focusing on those easy to win, green bonds for renewable companies. We need the whole economy to transition, and SLBs are a critical part of that. Yeah.
I think that I see someone has a question over there. Can someone bring a mic to the gentleman sitting just on the back of Brian, please? Thank you for that.
Arthur Krebers from NatWest. I guess building on the question before, mine is around how ESG is impacting all kinds of debt syndications. If you think about ESG ratings appearing in term sheets and screen announcements, if you think about ESG factors influencing allocation decisions. So I'm wondering a little bit more broadly how the panel reflects on how ESG is impacting the overall syndication and marketing process of new issuances. Thank you.
I think it will increase more and more. Okay, we are very obviously. We just need to start with the beginning. The person who decides about the final allocation is the issuer. So the banks are actually conducting a transaction on behalf of the issuer. They do submit a draft of allocation based on the criteria which have been agreed with the issuer and based on the allocation policy that we all publish on our website, by the way. And then when we submit that, we will discuss each and every time with the issuer, and the issuer will obviously judge how the allocation needs to be amended or not, right? And then, yes, there are some classification which are happening during the allocation process about how we qualify some of the investors compared to others. And it's obviously, I did create myself the role of ESG syndicate a year ago. Because we had so many questions, so what we decided to do with the senior management, I said that if we wanted to stay on the top of this industry, I'm talking about ESG, we needed to understand better what the investors were doing. And my ESG syndicate is actually talking to a lot of investors, analyzing not only what they are currently doing, but also the trend of what's happening there. And obviously the impact and the involvement of issuers are key in that respect. So yes, there is more and more of an involvement of ESG in the way we execute transactions, and I can see it only growing going forward. But maybe the issuer wants to say something about that.
No, look, you've described very accurately how the allocation process works in the transactions, and it's very clear in terms of an issuer. We communicate the variables, the parameters that determine allocation, and then the syndicate execute on that basis, and then we may review. But by and large, it's a clear cut. And in terms of any other observations, I'd say in terms of the investor engagement, if I turn the clock back, 3 years ago or so, we might have had very distinct standalone conversations with analysts around frameworks, and that alone. And separately, we had our normal IR engagement around credit and financial metrics. The two are really coalescing. And so that involves some of our IR specialists having to read up pretty intensively on the subjects, and not just broad general corporate sustainability, but the specifics of frameworks and ICMA principles as well. So really they're all just merging, is how I would describe, and that's the trend. It isn't going to go backwards.
Philippe, please.
Last but not least, as investor, we can accept a greenium, but not that large, please.
I like it. And on that note, I just see that we are time out. So I would like to thank everybody for listening to us. It's been very interesting, I believe. And thanks for your question as well, because it means that you are engaging on that. So, and thanks to my panelists who've been simply brilliant.
Thank you.